Hi, everybody. NFP Day.
Hi, guys.
Hi, Dale. Hi, everyone. How are you guys?
Hi, everybody. This is NSP Day. We are in our live coverage with Dale Pinkert from San Diego, Valeria Bednarik from Buenos Aires, and Yohay Elam from Barcelona. Hi, guys. How are you?
Great. Great to be here.
Good.
So, yeah, go ahead, Dale. Sorry.
Good. Looking forward to some volatility. There was some decent book squaring, guys, with the euro finally had an update yesterday. Was it book squaring, short covering in front of the number? What do you guys think? Because the Dixie did get to kind of a pivotal resistance level yesterday before it came off. What do you think, Yohay Bale? Is the rally to sell in euro, or could there be some more left to the upside?
I do believe that I'm sharing my chart. I do believe that it, of course, will depend on how the payroll came out today. But for most, I'm seeing it as a correction in this latest bearish. I'm not seeing much of an upward potential unless we can take it back above 110. And I do believe that the market will probably wait for next week, right, for the ECB. And it's true that the market has been pricing in a 15 basic points cut in their deposit rate, and today we have start of news saying that they are agreeing on a 10, and that helped the euro advance further ahead of the news. But I do believe that investors will remain a bit reluctant to act in here ahead of that ECB meeting.
Yeah, I agree. I think it's regarding euro-dollar. First of all, it's a weakness in the dollar seen yesterday across the board following the weak employment component of the ISM non-manufacturing PMI. And as Valeria mentioned, today's news about the ECB. I see this move, this leak, this report from the ECB as part of preparation for next week's event. I think my suspicion is that the ECB is letting go, is sort of releasing these weak expectations in order to over-deliver next week, in order to have a better response like we had in January 2015 when Draghi sent the euro down, rather than the huge disappointment we've seen back in December when he created expectations which were sky high and eventually it crashed and euro-dollar jumped 460 pips. So I see this as part of this warming up, massaging markets, yeah.
Okay. You know, on Fridays, I kind of look at what we're doing for the week. I look at weekly candles, and so far we have the potential of a reversal week to the upside in euro that could all evaporate in 20 minutes or so. But if it sticks, you can't ignore it. I mean, the last 2 weeks down, there was no reversal action. This is the first time. It looks to me under today's low, 107 is the next target if we take out this week's low. That's the way the weekly candle sets up for me.
Yeah.
Guys, we are having some problem with the chat, so I just changed the chat software. So if you don't see in either the live video or the chat in your room, please refresh, and we will be here with you guys. I just changed the chat, so that's the problem. But okay, I am just solving. So everything is right now. So if you have questions or if you have any comment to type, just feel free. And if you don't see the chat, just refresh the page, please. Okay. So what are the expectations for what are the number that we are expecting today? Valeria and Yohay and Dale?
Well, we're expecting the U.S. economy to have added 190,000 new jobs in February. The annual employment rate is expected to remain unchanged at 4.9, which is the lowest since 2008. But I do believe that, as we were discussing a few minutes ago in between us, that one of the main things the market will be watching is the wage, right? Because wages are expected to decline, to rise only 0.2 against 0.5 previous. And with the present wage, there's no inflation, no consumption, and we know that the Fed bases its decisions both in employment and inflation, and if we don't get a boost in inflation, the Fed won't move rates anytime soon, right? I know the market has already discounted the Fed will not raise rates this year. This is the general belief of the time being, but with further slides in wage, I do believe that that will be even heavier for the greenback than a bad headline, because we should not forget that even a 150 as we got in January was a good actual number, right? It was less than what the market was expecting, but it was great because it's not like the times we have saw 10, 20 in the middle of a crisis, right? New jobs per month, I mean. We are back in growth in that sector of economy, and it will take a much more than a tepid decline to 150 to revert the situation in the growth sector, in the shelf sector, sorry.
And what about you, Yohay? I have some echo.
Yeah, I can also hear the echo. Regarding wages, I also agree that it's very important.
Wait, we have some echo. Valeria, could you
Someone's
check?
in the bar room.
Yes.
Might be you. Where is he?
No, I'm not. I have my headphones,
Oh,
I think it disappeared.
Yes.
So, what I want to say regarding the wages, I agree it's very, very important. What I'm showing here is from the FXStreet calendar. The wage growth, the annual wage growth we've seen in the past few months, it sort of broke above resistance, reached 2.5% year over year. I think if it's 2.5% or higher, it's good news for the US dollar, for the US economy. If it falls back to the previous range of 2.3 or below, it's of course bad news. And regarding what Valeria said about the chances for a rate hike, according to the implied volatility in the CME group FedWatch, the next rate hike is expected for just the end of the year, December 21st, before Christmas. But also here it's a 50-50 chance, and for March it's close to 0 chances. Yeah, 2% according to bond markets, and of course even a superb NFP today will not change the picture for March.
Okay, and what do you think, Dale?
Well, let's just look back to last Friday. GDP came in hotter than we thought it would. Everyone's pushing off Fed rate hikes. Some people saying they may reverse course. I'm not so sure that it's gonna that they're going to have to reverse. We've had a pretty good rally in the S&Ps, although I don't think that they'll feel comfortable raising rates unless we get a new high in the S&Ps. So that would take some time if it's going to happen. Well, I still think they're not just data sensitive, they're market sensitive. So, but what a great recovery in the S&Ps when everyone was looking for a crash a month or so again. We're at a little bit over 61.8 back from that January swoon.
Yeah.
So now we're at make it or break it kind of levels between here and 2000 in the S&Ps 2020. We get through 2020, I think we're going to 2200. But I know a lot of people are going to be laying out shorts between 2000 and 2030 in the S&Ps. Should get at least a pullback from there. But if we get through it, the biggest surprise Mr. Market can pull after the worst start in stock market history would be to shake out the bears over 2130 and then possibly put in an important top. And I think that Mr. Market is going to shake out. There's still a lot of bears. In fact, sentiment, guys, was more bearish than it was during the financial crisis in 2008. So probably there still are a lot of bears. I know there's been a lot of short covering, but everyone's saying, yay, I missed it in January. I get another chance to do it here. We'll see if it's successful.
Yeah. So, Valeria, what number will be like bullish for the dollar, or what number will be bearish for the dollar? What could you see?
Anything in between the 150 we saw last January or below will be really negative for the greenback, particularly if it's come along with poor wage, right? I do believe that will be a sell-off in the greenback. But I do believe that if we have 160, 180, it won't be that bad. And of course, something above 220 to say, okay, this is a dollar bullish.
What do you think, Yohay?
Well, basically totally agree. I don't think I have anything to add. But as Valeria said, if we have, for instance, a good NFP but poor wages, or the other way around, it could be quite messy, very choppy trading. We need both figures to go in one direction to have really a more trendy move, a more directional move.
Yeah.
I agree with that, yeah. The two readings in the same direction will be the ideal.
Yeah, not like last month.
No.
So let's see instruments. Yeah, cruises. What we can see, I am watching the Australian dollar, Valeria, and this is just testing highs.
Yeah, New Year highs.
New Year highs. Yeah. Is it a sustainable movement or well? Look at that.
Yeah. Well, the 7380 region from a technical point of view, right? It's quite relevant because if you take a look, it's still there in December, in October, in August. It's really a relevant resistance from a technical point of view. But all of these gains have been supported by positive macro data, right, and improved trade balance. An impressive GDP reading in Australia for the fourth quarter of 2015. So my take is that there's a good chance that this rally will continue, right? Particularly if we had a bad payroll today and we managed to close the day well above this 7380 region. Of course, from a technical point of view, some selling interest should surge in here, a correction could happen, but the pair is clearly bullish, and that this last breakthrough higher above the roof of this ascendant channel there was in here. I erased it because it's broken, but if you take a look, there was sort of an ascendant channel in here, right? I was taking it from here. This is acceleration. It's helping the pair to continue advancing and will probably continue during the upcoming days.
Also, you can't ignore the fact that we've had a huge recovery in metals markets, with gold leading the way, and China has recovered. That's part of it too. And you know, gold, to me, if you show my chart here, it was the best trade of the year in any pair, in anything, from that 1050 level, 1040 level up towards we're trading 1263. If you show my charts here, Mauricio, I have the second drive on the hourly here in the gold. A lot of targets up between 1280 and 1300, and I think that's going to complete the first wave from 1050. That was so that would make it about a $250 rally. And after we get up there, I think that's the end of wave one. I've seen some Elliott counts, and then we should be in for a wave two correction, which could be halfway back, 61.8 back. 61.8 back would be, you know, $150 from 1300 would take it back to 1150. That's when Aussie might run into some profit taking, in my view. Although I've been corrected that even though I correlate Aussie with gold, that Aussie is more closely correlated with iron ore and some of the base metals than the precious.
I believe that it's more correlated with oil these days because I believe that most of the recovery was also based in oil prices stabilizing after testing 26. Or so, now around 35, and there we are hanging in there. Meaning it's not like oil is giving so much bullish signals at the time being, but at least has stopped the slide, recovered, and it's more stable, right? So I do believe that that helped also the Aussie to recover ground.
It's probably gone to that brown moving average you showed. So
Yeah.
I was talking 38 to 41 a few months ago. It wore me out. I was long oil-related instruments and got out a couple of weeks ago before the last pullback and didn't re-enter. But the technicals still could point to 38, possibly 41 in the crude oil market. That's pressured USD CAD. I know a lot of people are laying for a 132 buy in USD CAD. So to me, the Canadian's more of a petrol currency than Aussie, in my view.
It is, but the reaction seems to be at least
commodity related.
Yeah.
When it's risk on, oil rises, all commodities rise, AUD and CAD rise, and the other way around.
Right.
So yeah, it can correlate oil and AUD.
And the indexes, right? So it's going to be important. You know, a lot of people are saying we go to 38 and 40, and then they come up with these Armageddon type numbers like $17. You know, that this is just a bear market rally, and we're going to take out that 26 and trade under the 20 handle going forward sometime this year. So, you know, 60-70% of this recovery is already baked in the oil market. Very few saying this is a major bottom, just calling it a bear market rally for now. I think that a lot of technicians will say there's something more long-lasting if we could close above 38. I think that's their line in the sand for the bear case.
Back to gold, Dale. Ashraf Lady was yesterday in your room, I know.
Yeah.
He was building a technical and fundamental bullish case for the gold, right?
Yes, and he had similar targets out of this triangle, 1280, 1300. And but he wasn't really bashing the dollar, so I brought up to Ashraf, if the dollar can rally one more time in the Dixie above 100, a lot of people looking for 102, 103 in the dollar, which would take the euro back to 104, 105 or lower. The dollar can make a new high, euro can make a new low, and that could precipitate a pullback in the gold market. He said that made sense. So you know, if you miss a gold move, I still think that within the next 3 to 6 months, if you want to buy gold, you're going to have a chance between 1150 and 1100 to do so. Don't chase anything. Although gold bulls say this, don't wait to buy gold and wait. And that strategy has worked for the last few months.
So between 1150 and 1100, right?
Yes.
Okay, good fine. So we are like 8 minutes to go. Yohay, if you want to do a summary of the current situation between, in the market, just ahead of the Nonfarm Payrolls, what we can expect in Forex, in regarding to the dollar and regarding to other market, other instruments.
Well, the dollar is weak. That began yesterday with the disappointing data. First and foremost, the contraction in the employment component of the ISM non-manufacturing PMI. The euro enjoys the talk about less action from the ECB. Regarding the pound, it's mostly a short squeeze, and the weakness of the dollar. I don't see any justification for the strength in the pound. Apart from a short squeeze, data has been poor. All 3 PMIs missed, and Brexit is still relevant. The polls are regarding the referendum are balanced. So I think that if we have a good non-farm payrolls, I would expect the pound to fall because the rise has not been justified. Dollar yen not riding so much. I mean, it didn't move so much in the recent dollar weakness. Very much in range, 113.20 to 114 or 114.70. Canadian dollar showing a lot of strength and enjoying oil prices, enjoying strong GDP. I see 113 see 370 and 134.60. Aussie dollar, we talked about that, one of the strongest ones, and like Val said, for very justified reasons. 74.40, 75 are the next level, 72.80 on the downside. If we have a poor NFP, I think we could see the Aussie extending its rise. And the Kiwi enjoying also nice milk prices, but basically a bit out of the previous range, but not so exciting. So that's sort of, if you wish, a quick summary. The major currencies.
Really quick.
Yeah, because I could.
You know, guys, I have a question. I have been on vacations during the last week of February without a computer, without internet, without anything, because that's what vacations are for. I was really shocked to see that the pound lost this much and test 38. I know it's easy to try to explain it with yesterday's newspaper, as we say it in here. And I read a lot of justifications, the Brexit fears, and the referendum, and all the stuff, and poor data, of course. But do you believe that movement was largely overreacted? Meaning, it's not way too much to start talking about a Brexit and seeing pound 38.50.
Well, what I've heard from people is, what Brexit? Like it's not going to happen. But as I look at your chart here, Val, as at the daily on the pound, that looks like we've had a second drive there. It did diverge. And, you know, maybe we can make a case if the Dixie's going to rally above 100 that we finally go towards those 2008 lows of 135. I think that's going to be a great buy because what I'd like to see is a pound rally into the referendum, and then there be no Brexit, and I think that would be a better shorting opportunity. So that's my view on the Brexit, that it doesn't happen. Maybe we get one more push down, like Yohay saying, this was short covering in the pound, and we rally into the referendum. So, and then it would be kind of like a buy the rumor, sell the fact that there is no Brexit.
We didn't have Brexit. I don't believe we are going up.
You don't think so either?
No.
How about you, Yohay? You think there's going to be a Brexit?
No.
Okay, well, you know, that's almost unanimous opinion. I don't know anyone that thinks there will be. So that makes me nervous that there will be one.
Yeah, I remember right now a comment from Gus, our partner, our colleague, Gus Farrow, and
Oh, yes.
yeah, he told me that the feeling is for a no. Yeah, the sentiment feeling is for a no, but economic feeling is for a yes. So right now the no is winning, but you know, if there is some topics in the European Union that can angry the UK. So
what would be the reason for wanting to leave? What are the negatives of remaining in as part of the Euro community? What's the case that's being built? Is it immigration?
Yeah,
is it economic? What is it?
Yeah, he told me something about the immigration policy about, and also about the strain of Germany in the Eurozone. So you know.
So they don't want to be dragged down by any kind of, you know, the banks in Germany have been under severe pressure. So I don't know what kind of shape the banks are in the UK. Maybe Yohay can comment on that. So it's both economic, and the migration crisis continues in Europe. They continue to come even during the winter months and from Syria and Iraq. And Greece is really saying that there's a major emergency for them, and people are starting to talk about closing the borders. So what's your guys' take on what might be the major news story this summer as the weather improves for people to make the voyage from Syria and Iraq to the Greek Isles and Greece?
Oh, that will be fun, no doubts. But honestly, I have no idea on that. I believe that, unfortunately, the situation in Syria and Iraq won't improve the market. I mean, the war is doing nothing for that. They are all fighting for power, for oil, for never working for actually something good. So I'm not expecting that situation to improve, and therefore I would speculate that we are going to see a lot more of immigration, and that will be tough for Greece in the current situation, right?
Okay, guys, we have 1 minute to go. So
just want to interject one thing. Todd Wood, who's a geo reporter for, used to be the Moscow Times and now the Washington Times, says that we should keep an eye on the potential of a conflict between Turkey and Russia, that could be the next geo spark there, some type of skirmish between Turkey and Russia.
Okay.
Okay, it's gonna come out anytime.
3, 2, 1. Market's nervous. Hey.
okay, so
242. Wow.
240. Wow.
Strong one. Average hourly earnings negative minus 0.
Ooh.
That's not good
Bad
idea.
news.
Average weekly earning hour also down, below expected, below previous. Unemployment rate steady at 4.9%. So not so good news after all. But the headline is strong.
Yeah.
Yeah. So mixed.
Nothing because the mayor's quickly.
Headline: good upwards revision. Terrible wages. Yeah.
Take a look at the Aussie and Canadian dollar reaching fresh highs. The imbalance between the health of the economies, particularly Australia and the US, it's coming out. Here we go to break 74 at the Aussie.
Crude likes it, S&P's like it. So basically you guys are saying the numbers underneath the headline were lousy.
Yeah.
And so the Dow likes it, which means this gives the Fed cover not to do anything this month.
Yeah, and previous number of non-farm payroll, previous number of non-farm payroll was revised up to 172K.
Yeah. So it's good news.
Yes.
I mean, in the job gains, but wages.
Yeah.
Trade
Okay,
balance.
so far, euro-dollar is falling, so the dollar does like it.
Yeah. But not that much take up so far, at least. Daily lows, daily highs. Trade balance deficit widened in January, also in the US. So actually not that big news, right?
I want to get your guys' views on the double bottom we had at 111 in US dollar yen. That's kind of the linchpin for risk on, risk off here in the US as well as in Japan on the Nikkei. And still a lot of US dollar yen bears in there. So, I agree. I'm not a big believer in that double bottom. I'm just wondering if you had any clear pivots. 116 is the obvious level. That was a breakdown in US dollar yen. So I'm thinking we either don't get to where everyone wants to short it at 116 or we blow through it first, taking out the people waiting to short it at the breakdown. You guys have a view on US dollar yen?
I do. I do believe that we have a line in the sand around 1505. Because the double floor you mentioned has its neckline 10 pips below that level, and that level represents the 38.2% retracement of the post Bank of Japan's rally, right?
Yeah.
Line. So I do believe that that's like the line in the sand, right? That approaches to that level will probably be seen as selling opportunities because, as you said, there's a lot of bears still around, right? But if we take that level, then it will be a bit more constructive towards the upside, and of course 1660 will be the immediate bullish target. Of course, if we take back that higher, of course, then I believe that bears will give up. But for me, the line in the sand stands around 15, right? 115 there.
Yeah, we got a case of dollar bill.
It looked like
Actually,
possibly we could even go to that 61.8 level in the end, because a lot of people are going to try it. You have that flat line neckline at 116, so if we get through there, my vote is, especially if there's a chance for the S&P to make a new high, that we trade 117, 118, and then people will think we have the all clear, and then we top from there. So thank you very much, Val. Yohay, you have levels in the end you're watching?
Well, around 115 was a line that was seen back in mid-February, but also I think 116 was the previous line in the sand for the Bank of Japan.
Yeah.
When they began talking and then intervening, and then their whole strategy collapsed when the markets called their bluff. So it depends also on what the Japanese do.
What can they do, Yohay? You know, I've heard comments now, you know, since we got that market reaction, which basically flew in the face of the negative interest rate move.
Oh, yeah.
People say now Japan has to put their money where their mouth is. So what do people mean by that? Direct intervention in the market?
They were warned by, according to some reports, they were warned by the G20 not to intervene in markets.
Okay.
They did. There was a change in the composition of the voting, the sort of monetary policy committee of the Bank of Japan. So now we have one more dove instead of one more hawk. And remember, this decision about a negative interest rate was made 5-4, a very tight margin. So perhaps they can lower the negative deposit rate even further, more QE. But it seems like more of the same is not enough. The QE has diminishing returns, so at the moment I don't see them as they don't have too much to do.
Big break in gold, maybe that was it.
Yeah,
Gold.
With 2 drives.
well, it seems the market actually likes the headline and it's not worried about.
The stocks are going up at highs above 2,000, I think. S&P is above 2,000. Yeah, it's working up. So when the Fed will rise, will hike rates? It's a new question.
September?
Again.
They'll raise rates if Donald Trump gets the nomination.
Yeah, you know. Yes.
What a mess. Okay, guys, I'm the only one here in America, right? Oh, you know, Mauricio's a part-time. Yeah, I know you're here in Florida a part of the year, but in my mind, I want to go check out your home country. I'm reading so many great things about cost of living and everything there and how beautiful it is. What's the U.S. political scene look like to you, Val, from Argentina, Yohay from the UK, and you, Mauricio, you're more of a global citizen. I never know where you're going to be on the globe. You're everywhere. So,
I know I'm going to make a lot of enemies saying this, but I do believe that if Trump wins, America will lose a lot. Really, I do believe that you are going to be not any longer the dreamland, the promised land. No, my God, it's like a shame. It's like, I don't know.
So it's embarrassing for Americans
I can't
for
believe
this type of political discourse that we're having here, and the possibility that a real estate developer and reality TV star can become the president of the United States. Is that what I'm hearing from you?
Yeah, but that's why the democracy is. You know, democracy means that everybody can be president, even I. You know.
And even that, you know, Hillary Clinton, you know, they just gave immunity to someone who installed her server. So I mean, this is such a chaotic. You know, the front runner of the Democratic Party may be indicted. Okay, going into this, and then what we have Republican Party imploding, where there's more of a war within the Republican Party than there is against the Democratic Party. To me, it's so chaotic. I'm glad I have a passport.
Yeah.
I saw that the searches about immigrating to Canada leaped after the Super Tuesday results began coming in.
I did. Yeah, I read that too.
And Canada started to build a wall.
No, you're kidding.
That was a joke.
Giuseppe Bazil, he told me he's working construction, and from Toronto, he's going to be out there helping to build the wall to keep the Americans out.
Yeah. Well, I think Donald Trump is a reaction of the disconnection between Washington and the real people. So people are hungry of something that can be like a leader for them, or they have their voice. And of course, sometimes they choose well, or sometimes like now they are choosing the bad way. And it's a hate and angry talk, and
Well, I think out of anyone here today on the panel, Val, whose country has gone through economic crisis after economic crisis, like other countries in South America, know what the outcome is when a country is in trouble economically and people cry out for a strong man. You've had strongman leaders, Val, haven't you, in Argentina?
Oh my God.
When the people are hungry and there's currency crises and unemployment soars and food prices soar, that's been the outcome down there, right?
I do believe that when you vote in anger, which is what's going on in America, you screw it. Sorry, but I can't find a better word. But I do believe that you are voting in anger. You are mad.
Right.
You are going to, that bad word.
Yeah. And what's the outcome? It ended up only exacerbating the problem, didn't it?
Yeah, exactly.
When you had a strong man come in?
Yeah, there's a difference between a strong, smart man and a strong and true case, right? I can't.
Good one.
My God, I can't believe it, really. I can't see that man as a smart. I can't associate those words. Trump smart, it's not going together. He has no brains, whatever he's promising, saying, and whatever.
Trump?
I don't know. Maybe I'm
stupid.
okay, but it's
He's promising a trade war is what he's promising.
Promising what?
A trade war with 35-40% tariffs with our trading partners.
Yeah, he's lying about everything and flip-flopping. I don't think he's stupid though. I think he's quite smart. I think he knows how to wink to some racists in America and get their support, and knows how to wink to everybody and.
Yeah,
okay, so what could be going on here is there's going to be a difference between candidate Trump to win and get the votes and elected, and if he wins, he'll be different when he governs.
But this is a risky bet.
Of course it is, yeah, because he's quite unpredictable. So
exactly.
Unpredictable with the nuclear code is different than unpredictable on a reality show.
Oh, I sure hope he doesn't. I sure hope he doesn't come on TV like he did in The Apprentice, and say to to foreign countries, be afraid, be very afraid.
Yeah.
I have a question here. So, how the market could be affected by a Donald Trump presidency, or nomination in this case, a nomination from the Republican Party? How the market will react, in your opinion?
Dave, you go first.
I think that people begin to sell off the dollar should that begin to occur. Trade wars are not going to be good for the U.S. dollar. So,
less confidence in the greenback, right?
Yeah. Yeah, I mean, all people have to do is go back to the 30s under Smoot-Hartley. I'm not sure what happened to the dollar. We were pegged to gold at that time. So I just can't see that being something good, not only for the U.S., but the rest of the world, because global trade is the engine of growth globally. So if that's interrupted by policy from the U.S., I think that we have problems. Major problems.
I can't buy a Dell computer, for example, because the previous government has interrupted and put on those protective measures, policy measures, right? I can buy, I don't know, an iPhone, for example, in this country, I mean, right?
Okay.
There's so many things I can't buy, I can get, I need to take out from outside and fill forms, and it's like, I don't know, do you have no idea how much trouble I have to go just to get a new computer, a new notebook, nothing really, and I like Dell because I like Dell, right? So, because they are tough, they are good enough for me. Anyway, I mean...
Well, Adam has joined us, guys. Hello, Adam Button. How are you, buddy?
Hi, Dale. Good to be here. Hello, everyone. Yohay. Valeria.
Hi, Adam.
Okay, so Adam, we got a pretty strong headline number, but some of the numbers underneath, wages, etc., were not so great, and dollar bounced initially on this. We finally had at least some short covering in euro. Where's your head at on the dollar after this number?
Yeah, it's a great battle. I mean, the Fed's going to look at it and think, the jobs were so strong that it probably means the wage growth is coming later. Now, before the report came out, Ian Shepherdson, who's a really good economist on Wall Street, one of the best, he was saying February wage growth tends to be weak. There's a quirk in the calendar. It comes out soft, so maybe we can ignore it. Maybe the Fed will know that, maybe they don't. And they want to see this inflation coming, so I think they're going to see it anyway. And the other big story in February was, well, is the economy struggling? We had this rough start to January. Well, you can't really see it as struggling, given 242,000 jobs. It's an amazing month. So, the wage growth might temper something like dollar-yen or some of the dollar moves, but I think ultimately this is pretty good news for the dollar.
Okay, and also the S&Ps are taking it well. I know seasonally you said that crude, February was a good month for crude, and it had a decent month. It held, it advanced, it grinded up. I also remember you put me on the spot at our last interview and said, Dale, you were bearish the S&Ps all last year. What do you think now? And I said, I think we're going to put in a low, and that was, I think, the day before the low, and there'll be better shorting opportunities in April. What's your take on this recovery in the S&Ps now that we're 61.8 back? Are you in the camp that this is going to be a failing rally in the market, or is there now a chance for new highs?
I'm curious to see what happens today. I mean, the technical break is nice, right? There's a little bit of a double top in February, busted through. It's got some momentum. The last 2 days, it looked like we were going to turn lower, and we finished on the highs. I hate to fight a market that's finishing on the highs or near the highs. And today, this is a pretty good number. I mean, if you like good growth, plus not having to worry as much about Fed hikes. If you had strong data today and strong wages, then you start to get a little bit jittery about a hawkish Fed. You should still be worried about it, but I don't think you'll be worried as much. So this is a perfect report for stocks. Maybe we get back up 2000, 2020, and then it's time to start worrying because the 2050 level has been tough. But it looks good in the stock market. That's good for dollar-yen, and the idea before was that we're too worried about commodity importers, right? We were at the U.S., even China to that extent, or commodity exporters are the ones that can lead, especially developed market commodity exporters. And I think the U.S. is going to be just fine, and we're seeing that in the numbers.
Kudos on the last interview, Adam. You said just go with the flow, buy gold. Just go with the gold, and gold has continued to move. Do you think we're getting close to where this portion of the gold rally might be terminating? We had a $230 rally off the lows. I'm starting to see some divergences develop in the gold. And if you're positive the dollar My thoughts are if the Dixie can generate a new high above par, that might be the catalyst to take gold back down, some type of fib retracement of this rally. What's your take on that? And then the second part of the question was, you also said just go with the flow, short US dollar yen. I gather from your last comment that that may have changed. I know a lot of people want to short the yen at the breakdown, that very obvious line at 116. I've learned that when everyone wants to do something at one price level, it either doesn't get there or it blows through it like a hot knife in butter. So if you could comment on the dollar gold and US dollar yen.
Yeah, I was writing about the dollar yen at the end of February, and it dipped on the last day of the month, and there were some flows there, and it was a great spot to buy. I think it was down around 112, and the Bank of Japan just won't let it happen. It won't let it get down. 111 seemed to be their line in the sand. They're ready to ease. Kuroda said yesterday they're ready to ease. The numbers of Japan have been dismal as always. And so they just won't tolerate it. I do like the long side of that. You asked about gold. Though everyone was watching the wedge, right? That it was such a clear technical consolidation pattern in gold after the move down, the move up and the consolidation and the break. Now you hate to see a break out the day before non-farm payrolls because you can get whips on it so easily. It's usually a thinner market. And it would be interesting to see what's on non-farm payrolls, but it's come all the way back now. That's a good sign. If gold can finish flat or even down a few dollars today, that's probably a good signal for now. And I am cautious because the dollar strength might come. The Fed will probably be a bit more cautious. So I don't really see the urgency to chase gold, but if you just look at that pattern alone, it points to 1350. So
13.5. Okay.
I don't like to short it just yet, and it's probably the momentum trade is in force. Another $30, $80 in gold is not that big a deal, especially once the gold bulls start to get excited. But it's not a trade I love right now.
Okay. I learned when I was your age from a legend named Larry Williams. Have you heard of Larry Williams? He was famous for his book, How I Turned $10,000 into $1 Million. That's the beginning of trading contests. And Larry Williams said that stock market rallies are truer and healthier when it's happening with gold going sideways or down, and gold has actually been outperforming the market, so that kind of flies in the face of this equity rally. He used the metaphor that as gold rises, it's like a patient in the hospital whose temperature is rising. So have you ever seen this before, where you've had a big bull move in gold and a rising equity market, and what do you think that portends?
Yeah, I think it's just the fact that it was dovish and the dollar wasn't as strong. We had in 2009, 10 a huge rally in gold and stocks in the latter half of 2009. And it is about the Fed in that sense, and I don't know if I draw too many conclusions from both of them going up together. But the story is commodities. Gold's commodity, but not in the same sense that oil and industrial metals are. They're not commodities that are used up and expanded. And the story of 2016 is the commodity bust. Now we're in this bounce phase, right? Everybody's feeling better about everything. Oil's at up another 36 cents today, right at 35. I mean, a lot of the exporters will be fine at 35. Companies will be fine. So when we get this next flush down in oil, everything's going to go out again. So I think
okay, and you're looking for that. So I know a lot of people are saying this is just a bear market rally unless crude takes out 38. That's kind of the bear's line in the sand. And afterwards, there are a lot of numbers sub 20 handle. Are you in that camp, buddy?
Yeah, exactly. That's what we were saying at last time we spoke, Dale. I was talking about it wasn't a good time to be bearish of crude, and it's playing out very well right now. 38 is the level I'm looking for. I mean, we had weekly inventory data, another 10 million barrels into storage in the U.S. Nobody's stopping pumping at 35 here. You see CapEx numbers are coming down, but that's not going to change anything in 2016.
Yeah, well, that's bad news. That's bad news for the Clampetts of the Beverly Hillbillies, because that means Jed and Jethro and Ellie Mae are going to have to move from Beverly Hills to Watts. So I'm gonna wrap it with that. But just a comment, that was a decent call for recovery in the S&Ps on our last interview, wasn't it, buddy?
Yeah, it was. I mean, it was overdone. There was so much fear out there, and right now, the dollar is coming off here a little bit too. So that wage growth number is starting to weigh, and we're almost back to where we were before the report. So interesting start to the day, and stocks I think could probably do pretty well here, especially if the dollar comes on.
Okay, Adam, I'd like you to come back in April to LAR. I'm going to be wrapping it up. Val, great seeing you and talking to you. I'd like to have you come back to LAR when you have some time. And Yohay, keep up the great work that you're doing on the London opening show. And Mauricio, wingman producer, congratulations for putting together an expansion of LAR to a 24-hour channel with great content. I'm going to say goodbye to all you, my friends, my trading warrior brothers and sisters. Have a great weekend. Good hunting. I'm leaving now to get ready for my session.
Okay, thank you, Dale. So we are keeping here for a few more minutes. I want you to. Okay, thank you to say you thank you.
I'm waiting for everyone else to say goodbye to me.
Yeah. Okay. Say goodbye to Dale.
All right. Adios.
So right now, first, Yohay, I want you to give us a scoop on the next few hours and the next few days and what's happening today with that big headlines. It's amazing. 242,000 new jobs in February. Yeah, it's perhaps 29 February, the extra day of the month, or what?
I don't. Well, basically, everything's good apart from wages, and wages are certainly very important. We are seeing, at least for now, the chances for a rate hike rising. I mean, they were standing at December. Now they've moved forward to September. Of course, this will move many times. Don't know what will happen in the next few hours. So far, we have seen a stronger dollar, but as Adam mentioned, it's come off just a bit. The report does make sense in the sense that we had a broadening, rising employment to population ratio, rising participation rate, so we have a broader job market, and that can explain that wages aren't rising so much, but there are also these monthly fluctuations. All in all, I think it's a good report with a bit of a bad taste from wages, but the general trend of the economy in the United States looks good. Yeah. I don't know, the next few hours, where will we close regarding the dollar? I don't have a scoop or a guess.
I know. Thank you, Yohay, for coming today. It has been a pleasure. So,
mine as well.
Yeah, we saw a strong number, the new bids on the Federal Reserve hikes in the interest rate. So, Valeria, are you there?
Yeah, of course.
So, what is your take
well,
today?
Pretty much I agree with Yohay. The fact that wages were so poor, it's quite negative for the greenback. As we said many times, the Fed's decisions rest both in employment and inflation. A strong employment number is actually not relevant because jobs had been strong for over 2 years already. And the main issue in the U.S. continues to be inflation, and depressed wages are actually surely not helping to boost inflation. So I don't see much of a dollar upward potential in the short term for today. I don't know. As I was saying, I do believe that we need, as we said, at the beginning of this coverage, with depressed wage, there's a little the Fed can do. And therefore there's little the dollar can do.
Okay. So we can. Okay. Thank you, Valeria.
Okay.
Yeah, it has been a pleasure to be with you in this live coverage.
Same
So
here.
if
Same
you
here.
ask for a headline,
What?
if I ask you for a headline for the whole day, the whole number, what
Okay.
it could be?
Why do you put me in such places? I don't know. I would said that good numbers not enough. That will be the headline. It's not enough to support the greenback, right? It's not enough of good or strong payroll.
Okay, thank you, Valeria. And
And
what will be your headline, Yohay?
For today's jobs report,
Yes.
great jobs, no pay. I don't know.
Yeah.
yeah,
I see. More jobs and less money. Okay.
yeah.
Okay, guys, thank you very much for coming today for this live coverage. It has been a pleasure to be with you and see you the next week in the ECB, right?
Yeah, next week. See you guys. It
See
has been a
you.
pleasure as always to be here with you. I really enjoyed these moments.
Okay, thank you,
Me too.
Valeria. And
Thank you.
thank you, Yohei.
Bye bye.
Bye-bye.
Bye
So,
bye.
guys, we are just heading to the live analysis room with Dale Pinker. You know that this is a 2 hours show with interviews with people sharing ideas, sharing ideas and concepts, and building each other positions. You know, well, building each other ideas and strategies. So if you don't see Dale's live signal, just refresh your page and you will see that one that is beginning in 1 minute. Well, right now 2 minutes or 1 minute. And okay, so I just want to tell you thank you for coming today. Has been a pleasure to be with you. Strong headlines, but weak, bottom line in the Nonfarm Payrolls report in the U.S. employment report. Thank you very much. Have a good day with Dale right now. Happy weekend. Bye bye.